Most people enter the market thinking the goal is to win. That belief is exactly why they get liquidated. The market does not reward confidence. It does not reward prediction. And it definitely does not reward people who think every move is a signal. The market rewards survival. That's the reality nobody wants to talk about. Liquidation is not an accident. It is the default outcome for traders who trade without filters, without structure, and without patience. And that's why I built what you're seeing on the screen right now. This is not a signal scanner. This is not a buy here, sell there system. This is a probability survival scanner. Because if you don't survive, nothing else matters. Most traders ask the wrong question. They ask, is price going up or down? I don't ask that anymore. The question I ask is this market environment even worth participating in? Because the market spends most of its time destroying traders, not rewarding them. Chop traps, fake breakouts, late entries, crowded funding, emotional chasing. This scanner exists to say no more often than it says yes. And that's intentional. Every feature you see here is designed around one core rule. Avoid low-quality trades before thinking about profit. Let me say that again. This system is not built to find trades. It's built to filter them out. Because the fastest way to lose money is to trade too often. That's why you don't see green and red arrows screaming long or short everywhere. Instead, you see words like trap risk, wait for pullback, structure weak, no trade zone. Those are not bugs. Those are protections. The market doesn't owe you a trade every 15 minutes. And the scanner respects that reality. This system starts with volume because volume reveals intent, but volume alone lies. So volume is never trusted by itself. Every volume event must pass through structure. Every structure event must pass through trend. Every trend must pass through momentum. And every setup must pass through execution quality. If any layer fails, the trade is rejected. That's how liquidation is avoided. Look closely at the verdicts. Strong continuation doesn't mean jump in blindly. It means participation is aligned, structure is accepted, and momentum isn't exhausted. Controlled continuation means probability exists, but risk is still present. Wait for pullback means the market is tempting you, and that's dangerous. Trap risk means the market is actively hunting traders, and no trade zone means survival comes first. Most traders would rather trade than wait. That's why most traders lose. This scanner doesn't care about excitement. It cares about context. Daily RSI is not here to predict tops and bottoms. It's here to tell you when the market is stretched and dangerous. Funding is not here to chase momentum. It's here to warn you when positioning is crowded and risk is asymmetric. Microtrends don't override macro trends. They only refine them. And execution zones exist for one reason only: to prevent emotional entries. Late entries are labeled late on purpose, because chasing strength is how accounts disappear quietly. This is why you'll often see wait as the trade side. Waiting is not weakness. Waiting is discipline. Every trader who blew up once thought they were missing opportunities. They weren't missing opportunities. They were avoiding losses without knowing it. This scanner is built for people who want to stay in the game long, enough to actually learn it. Not gamblers, not dopamine chasers, not people looking for signals to blame. If you're watching this and you feel uncomfortable with how often this system tells you not to trade, when that's normal, that discomfort is the part of you the market usually exploits. The difference now is that you have a filter between you and your impulses. This is probability trading, not prediction, not hope, not hype. Just structure, participation, context, and patience. The market will always be there tomorrow. Your account won't be unless you protect it. That's what this scanner is for. And if this mindset resonates with you, you already understand something most traders never will. The goal is not to win today. The goal is to still be here next year. That's how real traders are built. Part 2. Another uncomfortable truth most traders avoid is that liquidation rarely happens on bad analysis. It happens on overconfidence. Traders see one confirmation and assume the rest will follow. They see a breakout and ignore where it happened. They see volume and ignore whether it was accepted. They see momentum and forget that momentum dies faster than accounts recover. That's why this scanner does not react to single events. A breakout alone is meaningless. Volume alone is dangerous. Indicators alone are late. Everything here is layered, because the market itself is layered. Structure tells you where risk lives. A resistance break that is accepted is very different from one that fails. A support that holds with volume is very different from one that holds on thin participation. That difference is where most traders lose money. So instead of guessing, the scanner labels the behavior. Support holding. Support broken. Resistance failed. Resistance broken. Not opinions. Not drawings. Not hope. Memory. Markets remember where money defended and where it abandoned price. And when structure breaks without acceptance, that's when traps form. This is why you see trap risk instead of aggressive bias, because the market loves to reward impatience right before it punishes it. Another thing most traders misunderstand is probability. They think probability is a number that guarantees outcome. It isn't. Probability is alignment. The higher the probability score, the more layers agree. Trend, structure, volume behavior, momentum, location. When those align, risk becomes defined, not eliminated. That's why high probability does not mean high leverage. It means clarity. Clarity allows smaller size. Smaller size controls emotion. Controlled emotion preserves capital. This is how the scanner avoids liquidation, without predicting the future. It doesn't try to be right. It tries to be selective. If conditions degrade, the verdict degrades. If structure weakens, bias disappears. If momentum decays, the scanner tells you to wait. No ego, no attachment. And this is where most traders fail. They fall in love with a bias and defend it emotionally. This system kills bias the moment data changes. That's not discipline. That's design. The scanner doesn't rely on your willpower. It removes the decision before emotion appears, and that is how survival becomes repeatable. Part 3. One of the hardest lessons traders learn is that excitement is the enemy of consistency. When trading feels thrilling, risk is usually uncontrolled. When trading feels boring, structure is usually doing its job. That's why this scanner feels restrictive to most people. It blocks trades. It delays entries. It labels zones as late. It says no more than it says yes, and that's exactly why it works. Liquidation doesn't come from one bad trade. It comes from a series of trades that should never have existed. This system is designed to erase those trades before they enter your history. Execution zones exist for that reason. An entry zone means conditions are aligned and risk is defined. A pullback zone means patience is required. A late zone means opportunity already passed. A no-trade zone means survival comes first. Those labels are not there to control you. They're there to protect you from the version of yourself that trades out of urgency, because urgency is expensive. Another thing this scanner teaches quietly is that doing nothing is a position. Waiting is not failure. Waiting is capital preservation. Every time the scanner shows neutral, you are being protected from randomness disguised as opportunity, and randomness is where liquidation hides. Over time, this mindset changes how trading feels. Losses stop hurting because invalidation was known beforehand. Wins stop exciting because execution was planned. Trading stops being emotional and starts being mechanical, not because you became smarter, but because you became more selective. That is what VAR probability trading represents. Not a shortcut, not a signal service, not a prediction engine, a decision filter, a survival framework, a system built on the belief that the market will always try to take your money, and your job is not to fight it, but to outlast it. If you understand this, you're already ahead of most traders, because the market doesn't reward prediction, it rewards discipline. And discipline starts with knowing when not to trade.